Silver has been stuck in a tight range for what feels like forever. Most people have stopped paying attention to it, but something under the surface has fundamentally shifted. The old tricks the big banks use to suppress the price aren't working anymore. Have you noticed how the physical metal is becoming harder to find? It isn't just a coincidence. Industrial demand is hitting record highs every single year. We're talking about solar panels, electric vehicles, and high-end electronics. The world needs silver more than it ever has before. Yet the supply from mines is actually shrinking. It's a classic supply and demand squeeze that can't be ignored much longer. For decades, paper contracts were used to keep the price down. Banks would sell silver they didn't even have to flood the market. This created an artificial ceiling on the price. But the physical market is finally starting to rebel. Investors are taking delivery of actual bars and coins. When you move the physical metal, the paper games start to fall apart. Look at the inventory levels at the major global exchanges. They are dropping to levels we haven't seen in a generation. What happens when the vaults finally run dry? The banks won't be able to settle their short positions with metal. At that point, the price has nowhere to go but up. But we aren't just talking about a small jump to $30 or $40. The math points to something much more dramatic. $100 silver isn't a fantasy anymore. It's becoming an economic, mathematical certainty. Think about the amount of money that has been printed lately. The value of the dollar is constantly eroding. In that environment, real assets like silver become the ultimate life raft. Most people don't realize how small the silver market actually is. It's a tiny fraction of the size of the gold market. When a little bit of new money enters silver, the price moves fast. Imagine what happens when the massive institutional funds try to get in. The door is very narrow and everyone will be trying to crowd through at once. You can't just turn on a new silver mine overnight. It takes years of permits and digging to bring new supply to the market. So the shortage we see today is going to last for a long time. The banks know this. They've been trying to cover their tracks for months. But you can only hide a shortage for so long. Eventually, the truth comes out in the spot price. Have you looked at the premiums on physical silver lately? They are telling a very different story than the paper markets. The real price is already higher than what the news tells you. This disconnect is the first sign that the system is breaking. The big players are quietly accumulating as much as they can. They want you to stay bored and look the other way. But the charts are starting to look very different than they did last year. The pressure is building like a volcano. Once it breaks $100, the world will finally wake up. The big banks have survived by playing a very specific game. They sell paper contracts that represent silver that doesn't exist. It's a way to keep the price artificially low for industrial buyers. But this system only works if people don't ask for the physical metal. Lately, large buyers have been doing exactly that. They are pulling silver out of the COMEX vaults at a record pace. When the physical metal leaves, the paper game loses its power. Think about the sheer volume of silver needed for the green energy transition. Every solar panel requires a specific amount of silver paste. You can't just substitute it with another metal without losing efficiency. The demand is inelastic, meaning companies will buy it at any price. This creates a massive floor under the silver market. The banks are starting to realize they are on the wrong side of this trade. They've spent years shorting silver to protect their own interests. Now, they are trapped in a position that is rapidly becoming a liability. What happens when a bank has to buy back millions of ounces? It creates a feedback loop that pushes the price even higher. We call this a short squeeze, and it's brewing right now. Most retail investors are completely unaware of this dynamic. They only see the daily fluctuations on their screens, but the smart money is watching the inventory levels. Look at the silver to gold ratio throughout history. Silver is trading at a massive discount compared to gold right now. Historically, this ratio always returns to its long-term average. For silver to catch up to gold's current price, it has to move up significantly. $100 is actually a conservative target in that scenario. The central banks are also starting to pivot their strategies. They have been buying gold in record amounts for years. Silver is usually the next logical step for diversifying reserves. It's the poor man's gold, but it has much more industrial utility. This dual role makes it a unique asset during a currency crisis. If the dollar continues to weaken, hard assets will be the only winners. Honestly, the fiat system is showing cracks everywhere. Inflation isn't just a temporary phase anymore. It's a structural reality of the modern global economy. Silver has always been a hedge against this kind of instability. In the 1970s, silver went from $2 to nearly $50. That was a 25-fold increase in less than a decade. If we saw a move like that today, $100 would be easy. The conditions today are actually much more explosive than they were then. There is more debt, more money printing, and less physical metal. The mining companies are struggling to keep up with the demand. The grade of the silver ore being pulled from the ground is falling. That means it's becoming more expensive and difficult to mine every ounce. This rising cost of production sets a higher price floor for the metal. No one is going to sell silver for less than it costs to get it out of the earth. The banks can only fight these fundamentals for so long. Eventually, the laws of economics take over. We are reaching that tipping point right now. Do you feel the shift in the market sentiment yet? The global supply chain is more fragile than most people realize. Silver is a critical component in nearly every piece of modern technology. If you look at the semiconductor industry, silver is absolutely essential. Without it, your smartphone or laptop simply wouldn't function. This industrial demand creates a constant drain on available stockpiles. Have you ever wondered why the price stays so low despite this? The answer lies in the massive naked short positions held by banks. They sell silver contracts without actually owning the physical metal. This creates an illusion of abundance that keeps the price depressed. But a paper promise isn't the same thing as a silver bar in a vault. The discrepancy between the paper and physical markets is growing. Industrial users are starting to worry about their future supplies. They are bypassing the open markets to secure direct deals with miners. When this happens, the public price becomes an irrelevant number. The real price is determined in private rooms where metal actually changes hands. This is how a shadow market for silver is being born. Once the major manufacturers can't get what they need, the panic begins. Imagine a car company halting production because they lack a few ounces of silver. They would be willing to pay almost any price to keep the assembly lines moving. This is exactly how a vertical price spike starts. It's not about speculation, it's about industrial survival. The banks are essentially playing a game of musical chairs, but there are 100 players and only 5 chairs left. When the music stops, the losses for these institutions will be historic. Some of the largest banks in the world are already facing massive legal scrutiny. They've been fined billions of dollars for manipulating precious metals. But these fines are just the cost of doing business for them. Eventually, the physical reality of the market will overwhelm their bank accounts. Look at the rising interest rates and how they affect silver mining. It's becoming more expensive for miners to borrow money for new projects. This further restricts the amount of new silver entering the market. We are witnessing a perfect storm of low supply and soaring demand. Silver is often produced as a byproduct of lead, zinc, and copper mining. If the economy slows down, those other metals see less demand. When those mines slow down, the silver supply drops even further. This is a unique paradox that most investors don't understand. A recession could actually make silver more valuable because it becomes rarer. The silver to gold ratio is currently hovering at extremes. Historically, silver outperforms gold in the later stages of a bull market. Gold usually leads the way, and then silver catches up with a vengeance. We've seen gold hitting new all-time highs recently. Silver is still sitting far below its previous peaks. The gap represents a massive opportunity for those who are watching. It's like a rubber band being stretched further and further. When it finally snaps back, the move will be incredibly violent. $100 isn't just a round number, it's a logical destination. The banks are running out of ways to hold the line. Every day they suppress the price, the eventual explosion gets bigger. Are you prepared for what happens when the dam finally breaks? The psychological barrier of $50 has held for decades. In 1980 and again in 2011, silver touched that level and pulled back. Each time, the big banks stepped in with massive sell orders to break the momentum. But the world is a very different place today than it was in 2011. Back then, the total global debt was a fraction of what it is now. The amount of currency in circulation has exploded since the pandemic. If you adjust the previous highs for inflation, silver should already be over 100. The real purchasing power of the dollar has plummeted. This means silver isn't necessarily getting more expensive, it means the currency used to buy it is becoming worthless. Investors are starting to realize that holding cash is a losing game. When the general public moves into silver, the market will vanish. There simply isn't enough physical metal for everyone to own a little bit. Look at the size of the silver exchange traded funds compared to the actual vaults. Many experts believe there are 100 paper ounces for every physical ounce. This is a recipe for a massive default in the futures markets. If even 5% of contract holders ask for their metal, the system breaks. The banks would have to settle in cash at whatever price the market demands. That is the definition of a force majeure event. It's the moment the paper price and the physical price completely disconnect. We are already seeing this happen in smaller markets around the world. In some countries, silver is already trading at record highs in local currency. The United States is usually the last to feel these shifts. But the trend is undeniable, and it's moving toward the dollar. Think about the massive shift toward renewable energy. Silver is the most conductive element on the periodic table. There is no plan B for the silver needed in high-tech infrastructure. As governments mandate green energy, they are mandating silver consumption. This creates a guaranteed buyer that doesn't care about the price. The gap between what we mine and what we use is widening every year. Recycling can only fill a small portion of that deficit. Most silver used in electronics is in such small amounts that it's never recovered. It ends up in landfills, gone from the supply chain forever. This makes silver a vanishing asset in a way that gold is not. Almost all the gold ever mined is still sitting in vaults or jewelry. A huge portion of the silver ever mined has been consumed and thrown away. This setup is a dream for anyone holding the physical metal. The banks are fighting a losing battle against geology and physics. They can print more digital contracts, but they can't print more atoms. $100 silver will likely happen faster than people think. Once the $50 resistance level is broken, there is no technical ceiling. The momentum will draw in every momentum trader on Wall Street. By the time the nightly news talks about it, the easy gains will be gone. The smart money is positioned now while the price is still suppressed. Don't let the daily noise distract you from the long-term fundamentals. The math is on your side, and the banks are running out of time. This is a once-in-a-generation shift in the global financial landscape. The transfer of wealth from paper to hard assets has already begun. Silver is the coiled spring of the entire commodities market. Are you going to wait for the breakout, or will you be ready when it happens?